Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. February, frustratingly, brought with it an inflation rise, with the CPI hitting 3%. No one wants to see their costs rise, but what we shouldn't lose sight of is the positive economic news that emerged in recent weeks. While it may change tack at its next vote, the Bank of England cut rates earlier on in the month in a direct attempt to support growth. And growth is there. It may not feel like it, but the latest ONS figures show our economy grew in recent months. GDP rose by 0.4% in December, pushed directly by the services and the industrial production sectors. It seems we're getting better at making things and serving our customers. House prices also continue to push upwards, shrugging off the inflationary issues. Halifax reported that house prices rose by 0.7% in January, after a brief dip in December. Meanwhile, Rightmove found that the average price of a property coming to market for sale rose by 0.5% this month. A relatively modest result for this time of year, but it also noted the number of new sellers coming to market is 13% ahead of last year, with buyer demand up 8% and sales agreed up 15%. Interestingly, if you take a look at the wider picture, which I'm generally a fan of, the housing market is in a great position historically. Analysis from Savills revealed that the total value of all homes across the UK topped 9 trillion for the first time last year, roughly 3.5 times the size of the country's economy. If it's not obvious already, we embrace optimism here at Market Financial Solutions, and by the looks of things, many of this podcast listeners are likely optimistic too. A recent survey from Nottingham Building Society showed that some 82% of mortgage brokers are confident about the sector's prospects for the rest of the year. That's about 4 in 5. And too right, they and all of us should be optimistic. Purchase mortgage searches were up 85% in January, according to 27 Tech's data, while remortgage searches were also up 82% or so. Also, after 2 bank rate cuts in 2024, and with the markets forecasting further cuts this year, a third of first-time buyers now think a good time to buy in the market. Moreover, February and March are typically the best or most popular months for sellers to list their homes, so brace yourself for a potential flurry of activity over the next few weeks. Elsewhere this month, the state announced major developments in its plans to speed up and tidy up the property market. The government has announced new plans to modernise the home buying and selling process, helping to stop property transactions from falling through. Essentially, the government has pledged to digitise the process to bring down current delays of almost around 5 months. Shortly after this announcement, it was also confirmed that AWAB's law will be in place from October. Of course, currently, this affects social landlords only, but it won't be too long until these rules hit the private rented sector. I've actually covered this topic in depth in a recent blog, so if you'd like to know more about AWAB's law and get a rough time frame in mind for when you and your clients should be taking action, please head over to our resources page. One thing that private landlords do need to concern themselves with now, however, is the Renters' Rights Bill. It passed its second reading in the House of Lords at the beginning of the month, and as of right now, it's currently in the committee stage. It's more than halfway through the bill passage process, and by the looks of things, it may be rolled out from the summer months onwards, so not too far to go. Make no mistake, this bill will completely upend the market, at least in the very short term, which is why it's so important to focus on the long term where we can. And over the last 5 years or so, London, the North East and the North West have seen the strongest buy-to-let returns. The priority now should be to identify which local markets will provide the best returns for the coming 5 years. Turning our attention to other areas of lending, insight from the recent specialist lending event revealed that second charge lending is on the rise as borrowers seek out ways to facilitate debt, consolidate, and embrace some green improvements. As a reminder, we may be able to help with all of this and more at Market Financial Solutions. Also, the bridging markets could see growth from an influx of American and Middle Eastern investors buying up super prime opportunities in the capital. That is according to Beauchamp Estates' 2024 Billionaire Buyers in London analysis. So that's it for this month's update. It may seem a tad shorter than normal, but that's because I'm on holiday soon, so I've missed some of the news items from the final week or so of February. Hopefully, nothing major is announced, which should have really been covered here. But of course, if anything is, we will assuredly cover it in next month's podcast or elsewhere across the content we produce. If there is any property-related news items that you'd like to discuss with us or have us potentially address in our content, we're more than happy to hear from you. Our marketing team can be reached at marketing@mfsuk.com. I hope to hear from you soon, and I'll catch up with you in late March. Take care. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.